Check out part 3 in our last edition of what we have predicted and how things have worked out. Hi, Jim Gore from THOR Wealth Management. This is the last in a series talking about what has happened to some of the things that we said in prior market updates and what has happened since. And in this one, I'm talking about some specific securities. And keep in mind, THOR has never owned any of these securities for our clients. Very important for you to know that. But these are things that are very hot securities that people were investing in. Well, let's first look at a market update that we did a little bit over a year ago. This is going back to March 27th of last year. This is when people were asking a lot of questions about Tesla and if it is a good investment. One of the things that we did, we looked at some things technically, but we also looked at fundamentally, and we compared it versus Toyota Motor. And you can see that we were talking about the valuation here, and you can see that Tesla was selling at a significant higher price than Toyota Motor. So you were paying 118 times earnings versus 7 times earnings for Toyota. And Toyota was paying out a nice dividend, almost 3%, where you had Tesla going back to 0. And I did a little bit more fundamental analysis that you can go back to that video last year and look at. And we were somewhat right in that you looked at Tesla and look at the earnings, what has happened since last year, since we did our market update. And you can see that Tesla's earnings are lower than that of Toyota, both doing pretty horribly here. But Toyota's earnings are down 17%, where Tesla's is down 39%. Well, this is the thing about investing, is that you might be right on the fundamentals, you might be right on the company, but look at this chart. Look at the performance. You can see Tesla has done very well compared to Toyota Motor. As a matter of fact, Tesla is up 55%, where Toyota is up 2.7%. So the fundamentals, even though fundamentally we were right, we were not right when we were looking at the stock itself. And if you go back to that market update, I did put in there that if you looked at the daily chart, it was saying that Tesla was looking good on a daily chart basis for possibly a breakout. And it did have that breakout. But we like to look at things fundamentally as well as technically. And even though stock is up 55%, keep in mind the earnings are down 39%. So this is not something that is a good scenario going forward to own Tesla. You don't want a company that earnings are dropping and the stock price is going up, because longer term, you need those earnings to go up in order for the stock price to go up. So Tesla has done very well. Now let's look at another update that we did, and this was a very, very popular fund back in 2021. There's the ARK Innovation Fund. And we actually had a couple of clients that wanted to buy it, and one did buy it on their own, even though with our objection, they didn't listen to us. Thank goodness it was just a small amount of money that they put into this fund. And this is a chart from that market update. After the stock prices come down from a 135 high, it was down. But our chart here was looking at a target price. We were looking at, hey, the ARK fund has come down, but it's in a range, trading range. And what we said here is that the target price was $75 a share. Well, ARK Innovation actually did a lot worse. And you can see that here in this chart. This is looking at the monthly chart. And you can see that the price actually got down to $30 on a monthly basis. It has gone up, and it's gone up, to $75, $76 right now. But still, it is way under from what it was back in 2021. And this is the one thing about a hot investment. And this chart here really shows what happens with individuals. They hear stories about a great fund, great performance. And, you're looking at this chart, you can see back in 2017, 18, 19, ARK Innovation was doing pretty well. But most people did not have money in there. And this is looking at the amount of money that was invested, assets under management in this ETF. And you can see here that they had very little amount of money into the fund, and then it exploded in 2020, 2021, when we had a lot of clients asking about this fund, and Kathy Wood was all over the place. She's the manager of the ARK Innovation Fund. This fund actually had, at its peak, over $26 billion in the fund. And at this time, when we were recommending, not investing in ARK, people don't understand ETFs have to take in funds. They cannot close the ETF. So they actually, when it peak at $26 billion, some of the companies, they own 20% of those shares of the companies. So they had a significant amount of money, and they had to sell off those shares when they started going down. That's what precipitated the price going down to $30 a share. So you have to be very careful with a fund, understanding, especially ETF, that they cannot close those ETFs, which is very important, especially for a fund like this that's trying to buy smaller companies, because they will end up owning a significant portion of the company, and that causes major problems when they have to sell. If you have any questions or concerns, please reach out to us at THORWealthManagement.com or give us a call. Take care, and talk to you in a couple weeks.
Subscribe to the THOR channel today.